In this video, we'll tell you about the best trading strategies for beginner traders. Learn simple but profitable strategies, master how to use them, and start earning with Pocket Option. How to use the moving average strategy. Today, we're going to show you how to use the moving average trading strategy for quick trades starting at 5 seconds. The simple moving average, or SMA, is an indicator that helps us see the overall direction of the market by ignoring random fluctuations. Using two SMA lines with different time frames, we can get signals to open a down or an up trade. The first indicator is fast, reflecting price changes over a short period of time, while the second one is slow, showing the overall trend. Go to the Indicators section, select the Moving Average indicator to enable multiple SMA lines on your chart. Click on the editing icon next to the indicator name in the top left corner of the screen to adjust the SMA indicator settings. Set the time frame in the window that appears. For quick trades, the first SMA line can be set with a time frame of 3 seconds. It'll be the fast line. The other SMA line can be set for 5 seconds. It'll be the slow line. Choose color and thickness. Click on the Save button. When the fast SMA crosses the slow SMA from bottom to top, it signals to open an up trade. When the fast SMA crosses the slow SMA from top to bottom, it signals to open a down trade. Let's take an example. The fast SMA crossed the slow one from bottom to top here. We can also see a sharp spike in price. This was a perfect moment to open an up trade. In this case, the fast SMA crossed the slow SMA from top to bottom, and the price went down. It's a great moment to open a down trade. Experiment with different time frames and number of SMAs depending on the volatility of the asset and the expiry time of the trade. How to use the Parabolic SAR trading strategy. Today, we'll show you how to use the Parabolic SAR strategy for quick trades starting at 5 seconds. This strategy is based on the use of the Parabolic SAR indicator. Parabolic SAR, or stop and reverse, is an indicator that helps to determine the trend direction and moments for a possible trend reversal. The indicator is displayed on the chart as dots that are placed above or below the price. How to set up the Parabolic SAR indicator for quick trades starting at 5 seconds. For short-term trades, the acceleration parameter, also called step, is set to 0.02, and the maximum acceleration parameter, also called just maximum, is set to 0.2. When SAR dots cross the price from bottom to top, it is a signal to open a down trade. When SAR dots cross the price from top to bottom, it can be a good moment to open an up trade. Use Parabolic SAR in combination with other indicators such as MACD and ADX to improve the accuracy of the signals. How to use the Alligator trading strategy. Today we will tell you how to use the Alligator strategy for quick trades starting at 5 seconds. This is a strategy based on the use of the Alligator indicator developed by Bill Williams. Oops, wrong picture. Alligator helps to identify trends and their direction using 3 smooth moving averages that visually resemble the jaws, teeth, and lips of an alligator. How to set up the Alligator indicator for quick trades. Set the following values. Jaws, blue line. 13 periods, shift by 8. Teeth, red line. 8 periods, shift by 5. Lips, green line. 5 periods, shift by 3. Follow the interaction of the lines. When the green line, lips, crosses the red, teeth, and blue, jaws, lines from bottom to top, open an up trade. When the green line, lips, crosses the red, teeth, and blue, jaws, lines from top to bottom, open a down trade. For best results, combine the Alligator indicator with other tools such as RSI or MACD to confirm the signals.
How to use the RSI strategy. Today, we'll show you how to use the Relative Strength Index strategy for quick trades starting at 5 seconds. The RSI, or Relative Strength Index, is a momentum indicator that helps you determine how much and how fast the price of an asset is changing. It ranges from 0 to 100 and is ideal for identifying entry and exit points in short-term trades. How to set up the RSI for short-term trades? Go to Indicators and select RSI. For short-term trades, consider reducing the standard period from 14 to 510 to make the indicator more sensitive to market movements. Watch for RSI values above 70, overbought, and below 30, oversold. These moments can offer good points to open trades. For example, if the indicator exceeds 70 from bottom to top, it's a signal to open an up trade. And if the indicator shows a value below 30 from top to bottom, it's a signal to open a down trade. Combine the RSI with chart analysis to refine signals. RSI can significantly improve your ability to make quick decisions based on market momentum data. Experiment with settings and find what works best for you.
How to use the MACD strategy. Today, we'll show you how to use the MACD strategy for quick trades starting at 5 seconds. This strategy is based on one of the most popular indicators, the MACD, or Moving Average Convergence Divergence. The MACD indicator shows the relationship between two moving averages of the asset price. It consists of two lines, the MACD line and the signal line, as well as a histogram that displays the difference between these lines. If the histogram is above the zero line and the peaks of the histogram bars are consistently rising, then there is an uptrend in the market. If the histogram is below the zero line, the trend is downward. How to set up the MACD indicator for quick trades from 5 seconds. Set the fast line to 5 periods, the slow line to 13 periods, and the signal line to 4 periods. Watch for MACD and signal line crossover signals. If the MACD crosses the signal line from bottom to top, it is a signal to open an up trade, while crossing from top to bottom can serve as a signal to open a down trade. Use the MACD in combination with other indicators and market analysis to get better signals.
How to use the Bollinger Band's trading strategy. This strategy is based on the use of the Bollinger Band's indicator, developed by John Bollinger. It consists of 3 lines, a moving average, and 2 outer lines, which are adjusted according to market volatility. These lines expand when the market is volatile and contract during calmer periods, helping to evaluate market dynamics and potential price reversals. How to set up the Bollinger Band's indicator for quick trades, starting at 5 seconds. For short-term trades, use a period of 20 and a deviation of 2. When the price reaches the lower line and starts to rebound, you can open an up trade. When the price touches the upper line and starts to recede, open a down trade. Use Bollinger Bands with other indicators such as RSI or MACD for more reliable signals.
How to use the ZigZag trading strategy. Today we'll show you how to use the ZigZag strategy for quick trades starting at 5 seconds. This strategy is based on using the ZigZag indicator. ZigZag is particularly useful for identifying short-term price movements in quick trading situations. This is one of the earliest indicators. It was used at the stock market. Its creator is not known. How to set up the ZigZag indicator for quick trades. Set the deviation to 2 to track minor but important movements. Set the depth parameter to 1 to make the indicator react faster to price changes. The backstep parameter should be equal to 1, which minimizes the redrawing of the indicator lines. Open an up trade when a new low point is formed and the line starts to move up. Open a down trade when a new upper point is formed and the line starts to move down. Use the ZigZag indicator together with volume indicators or oscillators such as RSI or MACD to confirm signals and increase the accuracy of your trades. How to use the candlestick engulfing strategy. Today, we'll explain how to use the candlestick engulfing strategy for quick trades starting at 5 seconds. This strategy is based on a candlestick pattern that signals a potential trend reversal. The pattern occurs when a new candlestick has a larger body than the previous one and moves in the opposite direction. This new candlestick is called engulfing candlestick, indicating that the trend may be about to change. The larger the engulfing candlestick, the stronger the potential movement. How to use the candlestick engulfing strategy. First, identify a candlestick that is larger than the previous one and moves in the opposite direction. Wait for the formation of a new candlestick to confirm the signal. If the candlestick is moving upward and engulfs the previous one, it's a bullish signal. Open a buy trade after the closing of the confirming candlestick. If the candlestick is moving downward and engulfs the previous one, it's a bearish signal. Open a sell trade after the next candlestick confirms the move. Use the candlestick engulfing strategy along with RSI, MACD, or moving average indicators. You can learn more about using RSI, MACD, and moving average indicators in these videos. Try now. Follow the link in the description.